Hi everyone. Today we're going to cover the retirement savings calculator. This is a very useful tool that will help you calculate based on predefined parameters like your age, rate of return, when you want to retire. It will help you calculate exactly how much money you need with perfect precision and what steps need to happen prior to achieve that goal. So first of all, let's go to the click me first. Of course, you have what you need to know prior to starting, some useful tips for you. Of course, the glossary that helps you figure out anything that you're not certain about. And now let's start with the example. So here on the pre-retirement, we'll do parameters aligned with what needs to happen pre-retirement, of course. Post-retirement follows the same logic for post-retirement. Then we're going to look at certain rates and inflation, and then we're going to analyze the end result. Now, let's start here. My current age is 25. The desired retirement age, let's say I want to retire at 50. I do not want to work a day over 50. Perfect. Now, on line 5, what the tool asks is what is the how many years do I have after I retire that I would like to receive that income that I invest in today. So every country has a different life expectancy. In Bulgaria, it's 74 years. I hope to beat the average. So let's say I'll live until 80 years, or not 80, but additional 30 years. So perfect. Now, the current annual salary, um, for example, 4,000 euros. So that's 4,000 euros times 12 months. Perfect. Percent of salary saved. I recommend that everybody, if able to save 20% of their salary. Now, the employee pension contribution match. So on the 48, let's say that we get 2% every year. So that's 960 euros the company pays for. Max employee contribution, usually it's about 1 or 2%. Now, post-retirement, what is the desired salary after retirement? As this salary would be adjusted for inflation. So what is the buying power you want to have today with this salary? So 48,000 is a bit much for me. So I would say that I would need three quarters of it. So 36,000. Now, any retirement before savings balance. So when I'm 50, let's say I have saved or got an inheritance or something like this, another 10,000 euros. Great. Now, the age when retirement income begins. This is usually a pension. So different countries are different. In Bulgaria, I think it's 62 or 3, so 63. Now, value of other assets at retirement at this point, zero. Now, the pension, the initial amount, so how much the government would pay. I think in Bulgaria, the pension now, and it's very low, it's maybe 350 euros. Hopefully, where you live, it's much, much higher. But let's say an average of 500 euros every month we would receive. Now, of course, the government always adjusts for inflation. So let's say that they do their job perfectly and they adjust for 3%, or 3% is a lot. 2%, that's more accurate. Perfect. Now, let's add in some rates. This field asks us what is the rate of return based on your risk profile that you have for your investment. So if you're high risk investment, you can have a very high rate. If you're a low risk, you're more conservative, you're going to have a lower rate. For the purposes of this demonstration, let's leave it at 8%. Now, the question here is how much is your rate of return after retirement? Now, after retirement, we always want to be much more conservative with our money. We want to take less risks. we want to make sure that our money are there and we do not lose it within a month. So let's say after retirement, it would be 5%. Expected annual inflation is very hard to predict, but we can safely say around 3%. So here, the government increases our pension with 2%, the annual inflation is 3%. Fair. Now, expected salary increase. That strongly depends on where you are in life. If you're in the beginning of your career, if you're 20, probably going to have a much higher increase in time. If you're 35 and you're in kind of in the middle of your career, maybe the increase is not going to be substantial, but it should still occur. But let's say that our salary increase will beat inflation and we can say 5%, which is more than fair. Okay, now we have all that wonderful data. Let's read it out. What we see here, let's start with the graph. The blue line is the money we need for retirement. So what we see here is that we we invest, 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 invest to this point, to the point of 50. Then we start using that money. We still invest it, we still get return, but we start getting return on smaller amounts until 80 when we deplete our savings. Currently, what we have is we invest, 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 but we reach only this point, which is 1.16213, and we run out of money before 70. So what does that tell us? First of all, for us to have adequate projection, so the blue and the green to be completely aligned, we need 393,000 more euros. Great. Years that we will have without savings. So basically, if I want to retire at age of retirement was at 80, I'm gonna miss 21 years. That I would not have the full amount of savings that I require. Of course, we can allocate them differently, but for this intent and purpose is 21 years. So the money needed for on yearly basis, another 3,410 euros will help you reach that result. So right now our contribution is 10,000. If we add another 3,400, we will have it. Or we can increase the amount we save of 20 to 29.6% in order to clean it out. Okay, so here we can do a couple of adjustments. First of all, let's say, you know what, I still want to be active, I want to work, so instead of retirement at 50, I'm going to retire at 55. So now, and I'm going to still live, going to live until 80, so I have 25 additional years until income. So what happens here is now I have 5 additional years for my investment to grow, which is amazing. Now you can see that our current projection goes over the blue line, which is exactly what we want. So now we have minus 425,000. That negative is good. That means that we have over projected what our income should be. So in order for us to reach the goal of 3,600, 1,000, I'm sorry, we would not need 20%, we would need 17.32% to reach this. So what we're saying here is that for us to have the inflation adjusted salary or income in by the time we retire, which in this case is 55, we would need to save 17.32% of our income, and we would have that income until we hit the age of 80. Wonderful. Thank you and be healthy.